The S&P 500 and the Nasdaq 100. That's why you came here. Now I'm going to get into the stock market and what's happening, or you can just skip ahead if you want. But I just want to thank everyone that's been here over the past month. Obviously, content has been lacking. We've been finishing the build of our house. As you can see, just kind of moved in. Our son was just born this past Monday. So again, he's officially like 7 days old now, give or take. So yeah, that's been cool. Very stressed, but it was all worth it here in the end, and we're happier than ever. So again, I appreciate all you guys for sticking around. We're back to content as usual. Now, going into the S&P, going into the Nasdaq, let me just break down a few of my thoughts and what's happened over the past month or so. Now, we had Jackson Hole. We've had, incredible inflation numbers. Our job report, the jobs have been kind of the dark horse here, right? But it's all been really interesting, and it's all been what the Fed wants in order to really start cutting those rates. And so I think Jackson Hole confirmed, like, rate cuts are coming. And then today you had Fed Daily come out and say that, like, guys, it's time for policy change. Our biggest fear is that we weaken the labor market, or that we can injure it, was his exact words. And so when I look at the broad market now, I get excited. Now, you may not see, like today, like the Nasdaq kind of falling down. But you look at the other side of the market, like Dow getting a lot of love with XLF banks. You have healthcare names, you have energy names all heating up, right? You even have XLPs and the consumer staples, consumer discretionary, whatever it may be, right? Getting a lot of love. Costco reaching $900. Crazy, right? Chicken bake on me, I guess. Double chocolate cookie, right? Crazy. Like, that is where we're at right now. So it's important that you're not having this one-track mind of, okay, Apple, Microsoft are going down. Tech is going down. The market's in danger. We didn't really suspect that getting rate cuts would send tech to the moon. I do think tech will continue to push into their all-time highs, like Apple, for instance. We'll talk about that here in a second. But you're seeing the other areas of the market that have been so weak for so long. You're seeing IWM have a better overall day than the Nasdaq. And that's going to continue to happen because now you're seeing companies that couldn't do anything for 2 years get in a better position. On top of that, you're seeing mortgage rates start to actually drop again, like we talked about. You're seeing the dollar weaken. You're seeing everything that you really wanted to happen, right? Now, again, does this mean we're going to go parabolic to the moon like crazy? Probably not, at least until after the election. I want to be really clear about that. Now, after the election come November, this is going to be a different conversation. Okay, this is going to be a very different conversation. Statistically and historically, September, October are kind of tragic months, right? Or worse months. And those are really bad months going into elections because of all the uncertainty. So again, end of October, heating up into November, I'm really excited. And I still think we have upside on specific areas of the market and the economy, right? I'm going to tell you that right now. And I may be like, Tyler, who is this guy? Who is this guy? He's about 5'11", 6 foot, almost on the dot, pushing the border, pushing the barrier. But who is this guy? Look, I just give you my opinion on the market. And I tell you how I got to that conclusion or to that opinion. So let's get into it. Now, I post this all the time on Twitter. So again, if you're not following on Twitter, again, it's like a 5-second process. The link is down below. I recommend following there. Again, I'm getting back to content as usual so you can see all the information in the charts. But the Nasdaq, this has been my baby boy. And if you're looking at day trading, it's like for the past 2 years, the Nasdaq has been like everything. It's been all your tech names. Everything that's exploded has come and stemmed from the Nasdaq. So you're seeing us lose that 19.7 little zone level, right? You had like a little bit of a false breakout here in the pre-market early on in the day, and then you drop below it, and you're seeing weakness there. Right, so that's what I'm talking about when it comes to weakness in the market on the day, and you're probably going to work your way back down to 19.4, 19.3 is your next area of support that I would be watching. But when you look at broad markets, you get a little bit of something else, right? We look at the Dow, nothing but net, only upside on the day, really. A little bit of a pullback, but again, you're working your way to all-time highs. I mean, you were about 100 points away from all-time highs at highs on the day. So again, the Dow really looking impressive. Again, the Russell, RTY, looking impressive, pushing back into local highs. Local highs here back at 2,300, 2,322. You pushed into basically 22.5, right? Pretty good. IWM put in that perspective, right? Hit 222, highs in the year, 228, very close. And again, when we look at something like QQQ, the Nasdaq, it's a different story. The Nasdaq here, excuse the levels, but you can see just trending down here since last Thursday. It's doing quite literally the opposite. I would say SPY is like in the middle ground, still looks really good. Again, you're holding your level here, 559. You're about 5 points away from all-time highs here on SPY. ES futures, very similar, right? Right there, kind of just boxed up, making higher lows, hitting a brick wall at 56.66. That's it right now. Like I would still say you look good, but yeah, that's where you're at. A little bit of a confluence, if you will, there. Okay, so that's very important that we understand. Okay, now a step further as we look at some of the fundamental indicators, the DXY coming down into 100 flat in our 200 SMA on the weekly, right? We look at the weekly chart here. Look what's happening. Again, very, very weak. Definitely a risk on environment like we've been talking about. This is a very big support though, so understand that. I would be watching that closely. Getting below the 200 SMA, we could see a lot of pain, but be very careful at this point. Now, the US 30-year yield and the 10-year yield, another big area here. The area we've been watching is 4% on the 30-year yield. And again, when you break below that, good things happen traditionally. So you're almost at 4%, and we haven't even cut rates yet. Again, when you hit and you broke below this in November of 2022, the stock market found a bottom, right? When you broke back over this in July, the market had its first pullback in 6 months. Very important that we understand what's happening here, okay? So when yields break this, you expect fireworks. We'll talk a little bit more about that. And again, we go into mortgage rates where this really kind of, makes the most sense now. So when you look at mortgage rates, and you have to pay close attention here, again, this is on the 5-year chart, so it goes way back, but I want you to really be able to look at where we're at. So this goes all the way back to August 31st, 2022, when we started breaking and holding above 6% on the 30-year fixed mortgage, okay? And that's kind of where we're at. We're dropping pretty rapidly here. And again, once we cut rates, this drop is going to happen even faster. You can see that we topped out around 8%. When we topped out around 8%, home buying basically hit a brick wall, and home buying basically just didn't grow. There was no home buying. It really slowed down. There was still some, but it slowed down. Now, when we go to last year, when we topped out around 7% in October, again, when the market found its bottom and you declined on the mortgage rates basically into February, well, home buying took a big bump. People started buying again because they were fearful that rates would climb like they did. Now, in my opinion, when you cut rates, you're going to drop down to 5% at the very least, another percent and a half. My personal opinion. I think home buyers will flood the market, and you're seeing big money agree with that thesis. You already saw your first net drop in mortgage rate and mortgage prices, right, in the United States, and you're already seeing home buying increase. We talked about that here on the channel already. But when I go to some of these stocks that I've been mentioning as far as real estate stocks, Zillow breaking up, looks really good. Redfin, pretty decent. I mean, you're still boxed up a little bit, but you're very strong. Open Door, looking halfway decent, not incredible. Oh, Realty Income, also popping up. Now, this is the area that you have to understand. When mortgage rates drop, this is going to be the only area that can really weaken the inflation on shelter. Why? Rent prices will not drop based on supply and demand. As long as the demand is there to fulfill what is happening with rent prices, meaning I cannot buy a home, so I have to rent a home because I have to live somewhere. Crazy to believe that me and my family have to live somewhere. I will cut costs in other areas. That's why the demand is being fulfilled there, okay? And the supply is, they're building more apartments than ever in multifamily all across the United States right now. Okay, why is this happening? Well, we'll get the prices on those rents down. Well, when mortgages become more affordable to compete, rent prices will have to drop. That will drop shelter inflation. Bada bing, bada boom. Hope that makes sense. If it doesn't make sense, I don't know how else to really break that down to you. I'm not going to lie. Now, on the sheet for the day, okay, looking at data on the day, I wanted to talk a little bit about this. You have your GDP numbers coming out on Thursday. That's probably your first big thing happening on the week. The biggest thing happened, you have pending home sales. It's important, but not that important, right? The biggest, most important thing right now, core and regular PC headline PCE. Friday, understand this. Now, I believe there's a little bit of downside today because you had a lot of analysts come out today and say they expect actually PCE to come in hot, right? They expect hot or higher than expected inflation reports on PCE, which would be pretty bad. You wouldn't want to see that, okay? Then you have your Michigan expectations. So what I'm looking for Friday, be paying close attention to that. Now, obviously as well, if you're paying attention, you have your earning whispers, you have your data coming in here. You have your, obviously, NVIDIA earnings, CrowdStrike sales for Affirm. big earnings coming in. Okay, big earnings on Wednesday. So make sure you're paying close attention to that. That's your only really important day, in my opinion, here. You have some names on Thursday as well, but Wednesday is like Armageddon. Okay, so pay attention there. Now, broad market, we covered it. You shouldn't have any questions there. Hopefully that made sense to you. Now, we're going to go into options here in a second and stocks I'm liking. But again, I want to just give a shout out to the sponsor of this channel. I do it in every video. Moo, the link is in my bio down below. You'll get some stocks. You'll get some other stuff. You check out their promotions for yourself. But again, this is who I use for all my trading. They just released their cash accounts for your trading as well. Check them out. All their promotions they have, you can check them out that link if you want to support the channel at all. But they have not gone down. TD Ameritrade, Morgan Stanley, Robinhood, all these brokers have been going down over the past month, not Moo. So I'm just telling you the facts. If you want to get in touch with their support, literally they will text you and you can do it on their platform as well. I absolutely love them. I'll have a dedicated video actually coming out breaking down the platform as well. So make sure you check them out. Let's get back to it. When I say there's a pretty big catalyst coming up on the week, it maybe means that you let off the gas until that catalyst happens. Like NVIDIA earnings coming in on Wednesday. You saw initial love happen this week and, push ups to 131 on NVIDIA, AMD pushed to the 200 SMA, ARM pushed into our targets as well, but you couldn't really hold those levels. You got kind of rejected. So when I look at the market right now, again, people keep saying, well, what do you think is going to happen on NVIDIA? Are we going to beat? Now, personally, I'll give you my opinion on NVIDIA earnings. I think you have your first 30 billion revenue. Big, but it's also going to be important how they portray the Blackwell chips and where they're going from that. They released a little bit of information on the day, and there were some rumors that they're going to talk about the other ways that they're going to monetize that Blackwell chip and other areas and chips that will stem from that as well. Because again, NVIDIA is always releasing new chips that are better and better, and that's why they're the best in the game. Because they're releasing a new product, it seems like every year. So again, very important what's happening with NVIDIA. Now, when we look at the bulk of tech, if we looked at tech in general, we've seen like Apple, Microsoft, Google, etc., perform pretty decent over the past year. I'd say Apple's the best performer in those categories right now. We'll talk about that chart in a second and why it's probably the best long opportunity out of those. But you need to understand, tech does well. But I would say to a large extent, if semiconductors don't do well, they kind of drag tech down as well. And that's what we saw today with AMD breaking back to the downside. So it's really important that we understand what's really moving some of these equities and the stocks. You can't go into it with the one-track mind of saying, okay, I'm going to trade this name and it has to go up or it has to go down. No, you have to be able to interpret what the market is giving you. I always say it. You don't take something from the market. You don't take a trade opportunity from the market. You take what's given to you. You take the setup that's at hand. I may go into the market wanting to trade Netflix, but Tesla may be the weakest name. The market's selling off. Then I'm probably going to be shorting Tesla for a better part of the day. Understand that. Today, I'm going to go over a few large caps, but I kind of want to go over mid caps as well because, again, you guys don't really get me mentioning mid caps, so I'm going to talk about those. But strongest name out there is Apple. I told Discord about this one as well. Discord spots will be opening on the 1st, so make sure you check that out if you're interested. Okay, Apple's really simple. Above 228, it's a long. It's like 230, then 232. Simple as that. Don't overcomplicate it. Higher lows holding up. That's what you want to see. I'm a bull on Apple, and I think the entire market's bullish on Apple. Every hedge fund out there right now, and if Nvidia is selling the shovels for the gold rush of AI, then I think the successful company with AI is either going to be Microsoft or Apple or both of them. But I think Apple is the one that's going to get the most love for the remainder of the year. So understand that. Apple, okay, this is where things get tricky because, I want to talk about Apple and I want to get people excited about some of these options, but you kind of miss some of those opportunities if you weren't buying on the dip. I still think it's an interesting play. Now, don't get me wrong. The January contracts move well. I still believe that. This thing could easily get above 240, okay? But again, manage your own risk. I don't want to tell people YOLO or anything like that, but I like Apple a lot, okay? I'm going to tell you right now. Now, I'm not going to go over too many large caps right now. I just don't want to. I think you're in an area that's a little bit dangerous if you're getting too bullish in one direction or even bearish, right? Because you have a big catalyst on Wednesday and then even on Friday. So I'm going to go with cheaper names. Okay. Number 1, PayPal. It's funny. Everyone wants to mention PayPal when it's terrible, but when it's good, we don't want to talk about it. PayPal broke $69 for the first time in like 2 years. You're breaking out, and no one's talking about it now. Kind of crazy. So PayPal above 68, 69, in my opinion, looks great. You break 76, this could explode. Again, you have to go to like the weekly chart. I'm sorry if you can hear my son like yelling in the background. Allie's trying to let me do some work. But yeah, so if you break that, you have room like into 90, 100. So again, what I'm looking for there as well. PayPal looks good. I think it's a dated position, not a short dated. Keep it on the top of the watch list. Next up is Zillow. Again, Zillow is breaking above your level of $57. Above 57, I'm targeting the 200 SMA of 65. If you break above $66, you have zero liquidity, people. Zero liquidity into $80. So could be one of the best trades of the year. Now, previous mid caps I mentioned, Robinhood was probably my favorite one, this or Upstart. But yeah, Robinhood, we got it at $18. We mentioned in Discord, you pushed in 21, it's killing it. Earnings have been awesome. So looks really good. Still like it. Number 2, Upstart. Again, kind of the ship has sailed, so you're not going to see me mention it that much anymore. So really quick, going into some of these names I'm liking. I got to hurry to get out of here. But Zillow, I like it a lot. Okay, I'd be going dated. Not going to lie to you. You can go for 2026 Januaries, go for 70s. They're $9. That's a steal. I think these get in the money easily if the market does really well and real estate does what I think it's going to do. Another name is like Redfin. You want to go a cheaper name. I mentioned them earlier. Okay. Again, dated contracts. Very, very cheap. Very affordable. Open Door. I think Open Door is one of those squeeze potential plays if it gets big on Reddit, which I think it could. 2026, again, a $3 contract for 2026 is 96 cents to $1. Crazy. Crazy. Again, the SPAC that never was, right? So depressing. But what I'd be looking for there. Last name is going to be AFRM. They have earnings on Wednesday as well. I'd be careful with earnings, but it held your level we mentioned, 31.5. Still really good, still really hot. I like it a lot. Looking for $34, $35 over that. Big breakout coming. Reminds me a lot of Upstart here. I would be watching that closely. Reddit is another big name I'm watching. Dated contracts here. Looks good, holding up. You have a long way back to 75, like that as well. Last thing I want to mention is Chipotle Mexican Grill. People were begging for like an opportunity with this thing. With the split, I think you got your opportunity. You dropped because of their CEO left for Starbucks, but you're holding the 200 SMA as you can see on the daily time frame. You're pushing back above it. Really clear trade here above 54. It's a long, it's a bull. Probably stops at like 53. You're targeting 57 short term, then back into $61. Awesome setups there as well. Hopefully that makes sense, guys. If you have questions, comment down below. Follow on Twitter. Again, Moo, the link is down below if you're interested. Check us out. Have a good one, traders. I'll see you tomorrow.